Investing in 2025 presents a complex landscape shaped by a confluence of technological advancements, shifting global economic dynamics, and emerging trends in sustainability. The choices investors make will be influenced by these factors as well as the broader context of geopolitical stability, regulatory developments, and the ongoing evolution of financial markets. As we look toward the future, several key investment themes are poised to offer substantial opportunities. Technology and innovation. The technology sector has been a consistent leader in driving market growth over the past decade, and this trend is expected to continue into 2025. The rapid pace of digital transformation across industries, coupled with the increasing adoption of artificial intelligence, AI, machine learning, and automation, positions technology as a cornerstone of investment portfolios. Companies that are at the forefront of AI development, cloud computing, cybersecurity, and quantum computing are likely to deliver substantial returns. In particular, AI and machine learning are revolutionizing industries ranging from healthcare to finance, creating new business models and disrupting traditional ones. Investments in AI-driven companies or funds focused on this technology can provide exposure to a sector that is expected to see exponential growth. Additionally, the rise of the metaverse, a collective virtual shared space created by the convergence of virtually enhanced physical reality and physically persistent virtual reality, presents a novel investment frontier. Companies involved in developing metaverse infrastructure such as augmented reality (AR), virtual reality (VR), and related hardware are likely to experience significant growth. Sustainability and ESG investing, environmental, social, and governance (ESG) investing has shifted from being a niche focus to a mainstream investment strategy. As global awareness of climate change and social issues continues to rise, companies that prioritize sustainability are expected to outperform those that do not. In 2025, ESG considerations will likely be even more deeply embedded in investment decisions. Investors should consider sectors that contribute to a low-carbon economy, such as renewable energy, electric vehicles, EVs, and energy storage. The transition to renewable energy sources is accelerating, driven by both policy incentives and consumer demand for cleaner alternatives. Solar and wind energy companies, as well as firms involved in the production of batteries and energy storage systems, are poised for growth. Moreover, the push for decarbonization is expected to create opportunities in industries such as green hydrogen, carbon capture, and sustainable agriculture. Green hydrogen in particular is gaining traction as a clean energy source that can decarbonize sectors where electrification is challenging, such as heavy industry and transportation. Companies that are early adopters or innovators in these areas could offer substantial returns. Healthcare and biotechnology. The healthcare sector is undergoing transformation driven by advances in biotechnology, personalized medicine, and telehealth. The COVID-19 pandemic has accelerated the adoption of digital health solutions and highlighted the importance of healthcare innovation. As we move into 2025, the focus on improving health outcomes through technology will continue to grow. Biotechnology companies that are developing cutting-edge therapies such as gene editing, immunotherapy, and mRNA technology represent a significant growth area. These technologies have the potential to treat diseases that were previously considered incurable, opening up new markets and driving demand for innovative treatments. Additionally, the aging global population will continue to fuel demand for healthcare services, making companies that cater to this demographic, such as those involved in elder care and chronic disease management, attractive investment options. Telehealth is another area with strong growth potential. The convenience and accessibility of telehealth services have been widely recognized during the pandemic, and the trend is expected to continue. Companies that provide telehealth platforms, remote monitoring devices, and related healthcare services are likely to benefit from this ongoing shift in healthcare delivery. Emerging markets. Emerging markets offer a unique opportunity for investors seeking higher growth potential. While these markets come with higher risks, they also provide access to rapidly expanding economies with young populations and rising middle classes. In 2025, emerging markets in Asia, Africa, and Latin America are expected to play a more significant role in global growth. Asia, in particular, remains a focal point for investors. China's ongoing economic evolution, coupled with the growth of India and Southeast Asia, presents a range of opportunities in sectors such as technology, consumer goods, and infrastructure. While China's regulatory environment has introduced some uncertainty, the country's focus on innovation and self-sufficiency in key industries, such as semiconductors and green technology, suggests that it will remain a critical market for investors. Africa is another region that holds promise, especially in sectors like agriculture, telecommunications, and fintech. The continent's young population and rapid urbanization are driving demand for new services and infrastructure. Companies that can tap into these trends, particularly those leveraging technology to address gaps in financial inclusion and access to services, are well positioned for growth. Real estate and infrastructure. Real estate remains a cornerstone of many investment portfolios, offering stability and income generation. In 2025, real estate investments will likely be influenced by trends such as urbanization, remote work, and sustainability. Urban centers in emerging markets, as well as cities that are hubs for technology and innovation, are expected to see continued demand for residential and commercial properties. The shift towards remote work, accelerated by the COVID-19 pandemic, has led to changes in the demand for office space and residential real estate. Investors may find opportunities in suburban and exurban areas, which have seen increased interest as people seek larger living spaces and more affordable housing options. Additionally, properties that meet high environmental standards or are designed for energy efficiency will likely command a premium, reflecting the growing importance of sustainability in real estate. Infrastructure investments are also poised for growth, driven by government initiatives to upgrade aging infrastructure and build new projects. In the U.S., the Infrastructure Investment and Jobs Act is expected to create opportunities in sectors such as transportation, energy, and broadband. Globally, there's a significant need for infrastructure development, particularly in emerging markets where urbanization and economic growth are creating demand for new transportation networks, energy grids, and digital infrastructure. Cryptocurrencies and digital assets. The cryptocurrency market has evolved from a speculative investment to a more established asset class, with growing acceptance among institutional investors. By 2025, digital assets, including cryptocurrencies and decentralized finance, DeFi platforms, are expected to become even more integrated into the global financial system. Bitcoin and Ethereum remain the dominant cryptocurrencies, but the market is expanding to include a wide range of altcoins and blockchain-based projects. The adoption of blockchain technology in various industries, from finance to supply chain management, suggests that the underlying technology will continue to drive innovation and investment opportunities. However, the cryptocurrency market is highly volatile and subject to regulatory scrutiny. Investors should approach this sector with caution, focusing on projects with strong fundamentals, real-world use cases, and transparent governance structures. Additionally, the emergence of central bank digital currencies, CBDCs, and their integration into the global financial system could have significant implications for the cryptocurrency market, offering both risks and opportunities. Commodities and natural resources. Commodities have traditionally been a hedge against inflation and market volatility, and this role is expected to continue into 2025. The demand for natural resources is closely tied to global economic growth, industrial activity, and technological advancements. In the coming years, the transition to a green economy will drive demand for certain commodities such as copper, lithium, and rare earth elements, which are essential for the production of electric vehicles, renewable energy systems, and advanced technologies. The supply of these critical materials is limited, which could lead to price increases and create opportunities for investors in mining companies and commodity-focused funds. Additionally, agricultural commodities may offer investment opportunities as global population growth and changing dietary preferences drive demand for food and other agricultural products. Investments in sustainable agriculture, including companies that focus on organic farming, precision agriculture, and water-efficient practices, are likely to benefit from these trends. The role of central banks and interest rates. Interest rates and monetary policy will play a crucial role in shaping investment decisions in 2025. As central banks around the world navigate the delicate balance between supporting economic growth and controlling inflation, their actions will have significant implications for asset prices, particularly in fixed income and equities. In a low-interest rate environment, which may persist in many developed economies, investors may seek higher yields in alternative assets such as real estate, infrastructure, and private equity. However, any shifts towards tighter monetary policy or higher interest rates could impact the valuations of growth stocks and high-yield bonds. Investors should be prepared to adjust their portfolios in response to changes in interest rates and central bank policies. Conclusion: investing in 2025 will require a strategic approach that balances growth potential with risk management. The sectors and themes discussed: technology, sustainability, healthcare, emerging markets, real estate, cryptocurrencies, commodities, and the influence of central banks offer a diverse range of opportunities for investors to capitalize on. By staying informed about global trends, technological advancements, and economic developments, investors can position themselves to navigate the challenges and seize the opportunities that lie ahead. Thanks for watching. Don't forget to like and subscribe to our YouTube channel.